All right, and until this weekend, and probably still, really the biggest story of 2026 has been the unmitigated destruction of software names and other industries that might be vulnerable to AI disruption. Now, there is a belief that software is irreparably damaged, right? Even if some of these names come back, they'll never command the same kind of premiums. And despite the huge drawdown, you can see this big move. The shorts keep piling on. Look at this. Only 7% of the time have shorts ever had a bigger position. They are really going for what I would say is the coup de grace. My next guest is saying, though, not so fast. Let's bring in RIA Advisors CIO Lance Roberts. All right, Lance, you know, without knowing anything about the industry, right, we're going to pull up the IGV chart. Just simply looking at this chart with the naked eye, I'm seeing it resting right on that 200-day moving average. But it feels like if it doesn't hold there, this thing could get cooked even more.
It really could. And, you know, one of the things that I wrote in our article about this specifically is owning an entire index, you get the winners and the losers. And look, there's no doubt that AI is going to replace some companies for sure. But there are going to be winners out of this. You know, Charles, think back to the dot-com crisis, right? A lot of companies went away. Global Crossing, Lucent Technologies, gone, right? Apple, Amazon, those companies survived and grew into the behemoths that they are today. So, you know, I think for investors, the challenge is going to be really digging down into the fundamentals, looking at these companies in these sectors. And even if the whole sector is weaker, there's going to be some winners that emerge out of this eventually.
Now, your note is interesting because you say the sell-off is analytically lazy and underscores the fact that AI has serious issues of its own, including, you know, we've talked about this, many reports, the hallucinations and the level of hallucinations, just really phenomenal, and how little AI is verified for accuracy. I mean, is it really, it's essentially you're saying it's not ready for prime time, certainly not enough to displace some of these major businesses.
Well, that's right. And you know, you think about it too, Charles, is, you know, if you've got a company with 1,000 employees and you're in the service business with a lot of customers, or you've got inventory to deliver, are you going to really trust something that, you know, AI just develops off the shelf and that you're going to run your business on? Or are you going to use software that's been historically tested, has had bugs, has had issues that have been fixed, have had challenges and customizations? It's very hard for major companies in particular to just make a switch on a dime. It's going to be a very long process to make switches from these companies because they have such a deep embedded moat around their businesses and control of that data that companies are going to rely on stability and security before they just accept something off the internet.
Right. A great chart last week showing it took Netflix 8 years to put Blockbuster out of business, right? And that's a whole different dynamic, right? We're not talking about Blockbuster. I know some of the SaaS categories that you like for the transition: platform systems, cybersecurity, data infrastructure, vertical and domain specific. So I'm going to pull up the picks so we can kind of walk through some of these ideas because you had a lot on there, and I know I'd rather have people go to your website to get all of them, but we'll share some of them now. Starting with now, ServiceNow. Listen, I'm in it. I'm getting hammered. I'm down at least 40%. Please tell me I'm going to be okay.
We were long ServiceNow previously. We did exit our position when we broke a bunch of technical support, but I really like this company longer term. This stock is very cheap. And, you know, it's interesting, Charles, right now everybody's chasing energy and staples, and these stocks are grossly overvalued, you know, relative to their valuations long term. You know, ServiceNow is trading very cheap. It's a value stock on a lot of fronts. And so when you start thinking about the fundamentals, they're growing earnings at 20% a year. Their price to earnings growth is around 1. This is a company that trades well, is growing well. And when money starts looking for true value and growth back in the markets, when we get that rotation back, I think ServiceNow picks up the winner there.
Salesforce.com, they posted an earnings report that was phenomenal. The stock got hammered in the aftermarket, that pre-market. Benioff did every show. I'm trying to get him to do my show. He almost did it. That's how desperate he was last week. The stock is holding its own right now, but what is it about this name that it feels like it's got a target on its back right now?
Look, it's just, again, going back to the analytically lazy part of the analysis, people are just selling. If it's got SAS in it, it's just getting sold. And this is the lazy part. Instead of looking through these companies, again, Salesforce is hugely integrated with AI. They're integrating AI into their systems. AI is going to make Salesforce a stronger product, not a weaker one. And so again, going back to what we were saying before, am I going to trust a CRM that just AI just developed with all of my customer data? I'm a $2 billion asset management firm with thousands of clients. We use Salesforce. We're not changing that anytime soon, because that data is so critical to not just our company, but SEC compliance and everything else. So it's going to, again, I like Salesforce. I think they're a winner.
Lance, I know you also like Microsoft. We had someone else earlier who liked it too. Yep. I got 30 seconds, right? I just want to kind of get your overall feel, because you've been through these situations before, this war in Iran. Equities have come back. Oil, though, trading higher. But, you know, I pulled up a longer-term chart because this is Brent. Over the weekend, people were talking Brent going to 100, maybe even back to 120. I mean, do you believe that?
Well, you remember when we attacked the Iranian facilities to bomb their nuclear facilities a few months ago? Everybody said the same thing. Oh, oil's going to go to 150 because of this. We opened up a little bit stronger the next day and then immediately sold off. The U.S. is the largest producer of oil in the world now. I mean, we're an exporter of oil. We import very little. The Strait of Hormuz has very little impact on the U.S. And again, Iran doesn't have a navy. I don't know how they're going to block the strait, but you know, that's a whole different conversation. But yeah, no, look, I think this is a short-term blip in oil prices. Supply and demand will be the driver of this longer term, and I think oil prices are going to settle back into the mid-60s at some point.
Good stuff. Appreciate you, man.